Welcome to the Stock Guy Analysis. Today we have a really focused mission for you. You've sent us some sources about BitMine Immersion Technologies, that's BMNR, and they've been making some big moves. Big is right. We're talking about moves that are both really strategic and pretty controversial. Exactly. This isn't minor news. We're looking at a major executive appointment and a critical financial vote that has a lot of investors talking. That's right. So our goal is to cut through the noise and understand how these two things connect. First, the new leadership, who they brought in and why it matters, and then the vote. The 50 billion share proposal. The 50 billion share proposal. These two pieces are absolutely linked, and understanding their combined impact is essential if you want to know where BMNR is headed. The timing. The two main things we're looking at are the executive change announced on January 9, 2026, and the upcoming vote on share authorization. That vote happens at the annual shareholder meeting on January 15th. So we've got less than a week. The timing here is very immediate. The new leader. Let's start with leadership. On January 9th, BMNR announced that youngkim joined the company effective immediately. And not in just one role, he took on two huge titles: Chief Financial Officer and Chief Operating Officer. He was also placed directly on the board of directors. That's a complete power shift: strategy, finance, and operations all under one person. Kim reports directly to Chairman Tom Lee of Fundstrat. This is not a normal hire. This is a strategic deployment. When you look at Kim's background, over 20 years managing multi-billion-dollar global franchises across finance, venture capital, and engineering, you start to see why. The sources call him the engineer investor. And for a company like BitMine, a tech-centric Treasury accumulation company, that combination is everything. What BMNR really is. This isn't just crypto mining anymore. It's about accumulating Ethereum, running validator infrastructure, and generating staking yield. It's a technology operation at its core. A traditional CFO looks at balance sheets. Kim, with MIT Engineering and Harvard Business School, can evaluate both the technical efficiency and the financial return. He understands the digital asset factory floor. The alchemy of 5%. BMNR currently holds about 3.43% of all circulating Ethereum. Their stated goal is 5%. That's not just big, that's ecosystem-level influence. Holding 5% gives institutional trust, prestige, and informal governance influence inside Ethereum itself. That's what Tom Lee calls the alchemy of 5%, converting scale into influence. Why the 50 billion shares matter. Kim arrives days before the shareholder vote that would allow BMNR to increase its authorized shares to 50 billion. And yes, that number scares people. But here's the key. Authorization is not dilution. Authorization only raises the legal ceiling. It doesn't issue new shares. BMNR currently has about 426 million shares outstanding with a cap of 500 million. They're already at the limit. They need flexibility. When dilution is good or bad. Dilution only becomes harmful if new shares don't bring in more value per share. If BMNR issues shares to buy ETH, validators, or income-producing assets that grow earnings faster than the share count, that's accretive. That's why the pipeline company analogy exists. ETH is volatile, but staking yield is recurring cash flow. That's the hedge. What Tom Lee actually wants. Tom Lee gave two reasons for the 50 billion cap. 1. Flexibility, to raise capital and seize opportunities quickly. 2. Future stock splits, to keep shares affordable if ETH rallies. That's important. They are preparing for a world where Ethereum appreciates so much that BMNR stock needs to be split repeatedly. The real question. The vote will probably pass. The real question is what youngkim does with the power. His job is to ensure every share issued creates more ETH income and more value per share than it costs. If he succeeds, this becomes a compounding engine. If he fails, the authorization becomes a liability. The signal. Management explicitly referenced, if ETH rallies sharply. That suggests they aren't just waiting for a bull run. They're structuring the entire company around one. The 50 billion share authorization isn't just defensive. It might be a signal that they see something coming, and they want to be ready to act before it arrives. Thanks for spending this time with us. We'll be tracking the January 15th vote closely. Make sure to like, subscribe, and enable alerts so you don't miss what comes next.